Stand by. Welcome everybody. This is the Thursday evening Viper Trading webinar. We're here to learn about trading the futures markets using the Viper tools. You're absolutely in the right place. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, good. Now that that's out of the way, tonight's topic is looking at market correlations and how you can trade them to your advantage. First of all, we're going to talk about how to see them. And second of all, we're going to talk about how you can use them. Okay? All right, so here we go. Let's get over to screen one. Now, what I've done today is I've paired up a couple. I'm going to start off with a couple of equities and show you how one's movement can affect or lead the movement of another one. So that's what you're looking for in correlations. When I say correlations, is everybody clear what I'm talking about? The word correlation. What does that mean? When somebody says those two markets are tightly correlated, what are they talking about? What does that term mean? Anybody? Anybody got an idea what that is? Man, I'll tell you what, those markets are very tightly correlated. What the heck are they talking about? They move more or less about the same or opposite of each other. Gene, that's correct. Yes. Tight correlation means something is very similar or opposite of each other. One could be a mirror image of the other. One could be moving ahead of the other, giving you a signal that the other one's about to move in a certain direction. And so what we started to do, I've done this for a long time, but I'm only recently started to kind of share it with the team, is look at markets that are correlated and see if I can get sort of an edge on other traders, other market participants, to try to get ahead of the move and anticipate what that move might be. Now, I do want to show something here very quickly to you, okay? I've added an indicator, and you don't need to do this. This is not in the live room. We don't publish this. It's just something that comes out of the box with NinjaTrader. It's called Current Day OHL. This shows you the open, the high, and the low of the day. Open is in black dashes. I have that setting. This is just what I've put on here. In addition to your standard template settings. Let me go ahead and apply this to the ES chart. Stand by. Okay, it's loading. All right, there we go. So before we get into that, let me explain what you're looking at here. Let's start with the YM chart. We're connected to a data feed to our broker, NinjaTrader, and we are getting data feeds, futures data from that feed. Okay, and we trade 4 range bars. They're not time-based. Each bar is 4 ticks, and we have indicators on the chart. We have our power meters, which are the trends. We have our bar colors here, blue, yellow, and red. We have our bands. We have 1, 2, 3, 4 bands below the thick line in the middle, which is called the mid band. Then we have 1, 2, 3, 4 above it, which is the total of 8 bands. Now, we also have predictors, which are the real-time support and resistance levels, like such. Most of you have the template, so you're familiar with all this. Some of you might be new. We have some people in here on a free trial, so that's cool. Welcome, if I'm speaking to you. Now, you're not going to see this in the live room. This is something you can add on here. This is just, comes out of the box with Ninja. You don't have to download or install or do anything funny with it. I just made the top blue. I made the opening of the market. So what happens is what this does, this indicator will start at when the market opens at 1:30 Pacific, my time. Okay, that's 1:30. And then it will track the market all the way through until it closes at 1:15 my time. It will end, and then it will start new. And so going into, let's just orient you as far as the open of the market's concerned, which was 6:30 Pacific, trading the equities right here. I think this is something that's going to help everybody, and that's why I've introduced it, because I've started using it myself. What is one thing one thing that we like to teach? There's all kinds of indicators and programs and trades and things that are out there, and we try to keep it simple. What do I mean by that? I personally like trades that are at or around the mid-band. So let me illustrate as follows. In the pre-market session, you could clearly see that the background was green. The bars were predominantly blue. All the bands in the mid-band were stair-stepping up. And so when you retrace into the mid-band on a pullback, as it's shown by this little box right here, this in the pre-market, if you were trading it, were examples of long trades. So in an uptrend, we're looking to get long, but the caveat is we've got to get long on a retracement, right? We don't buy the thrusts. So in an uptrend, of course, the thrust is the push up. The retracement is down into support, and those are buy. Those are buys right there, okay? Now, keeping with the mid-band theme, notice what happens here. Right at the open, where is YM located on its chart with respect to the open high low of the day? Where's YM at the open of the equity trading session, 6:30 Pacific time? Where's it located? Right here. That's the line. 6:30 is right here. So where was it at? Right. In fact, just minutes before the open of the market, it had just put a fresh high in for the trading session. Yes? Now, why is that important? Why is that important to know? Well, let me ask you this question. Is this a place that you would want to take a trade? Yes or no? Now that you see it. In fact, let's go so far as to go back and recreate 6:30, and I can ask that question again. Is this a place that you would want to take a trade? Yes or no? Right here. Breaking the highs of the day. No. No, 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 no. Never, ever, ever. If there's one thing that you remember from this webinar, of all the things that I'm going to share with you tonight, please, please, a million times please, and pinky swear with the whole team on this, do not ever take trades at the highs. This is a recipe for disaster, because what it's going to do inevitably is it's going to retrace. It's going to pull back. And in this case here, you can see that YM pulled back very precipitously after it broke that high into the first 2-3 minutes of the trading session. So if you had bought right here, you would have taken a full stop out and gotten creamed, right? I mean, I don't know where your stop would have been here, but it definitely would have taken it out. And if you had multiples on, you could have been whack-a-mole in the first 2 minutes of the trading session. So, you know, what I've come to learn is this. Here's a good rule that I think you can sort of take to the bank. When a market starts to trade, and this is true of any market, and I'm going to show you this on ES in just a minute, so hang tight. Can you see that the mid-band was sitting right here around this 26,848 area? More or less kind of right in here. Can you see the mid-band sitting right there? See it? Now, between here and here is normally somewhere around 20 to 24 ticks. Okay? Now, in this case here, when this pulled back, at the time it was pulling back, if you were thinking long here at the mid-band, you never got a signal. So in other words, if markets are going to give you mid-band trades, they have to pause there, and they have to reverse or bounce or roll, right? So thinking about our long trades in the pre-market that we mentioned a minute ago, here we can see that we bounced, right, off the mid-band or near it. We bounced. You can very clearly see. So it forms like a V. It forms it like a V. It'll come down and it'll hit, it'll bounce, long trade. Hit, it'll bounce, long trade, right? Okay. Now, let's look at what happened after the open on the retrace off that fresh high. Did we ever get a bounce as it approached the mid-band in here at 632? Did we get this type of bounce here? So was a long trade ever triggered here? No. Can you see that? No. In fact, it took out the midband, and both support levels here were broken. So when you see this, this is an indication that what might be happening when the midband and support levels are broken right after the open, after a fresh high. What is that? What is the first clue that starts to go through your head when you see that type of price action? Possible trend change? Going to watch what happens if it gets back to the midband? Could be going into a downtrend now? Right. These are all going through your heads. It might bounce down here off of line 1 and go back to the midband. Might I take a long? Sure. When I watch, if I get weakness at the midband and start thinking about shorts, yes. You can see clearly here that the background has changed, right? We've got a red stealth line here. The stealth is a little sneaky snake lines here that are red in a downtrend, right? See the red, green in an uptrend. That's a little sneaky snake line. We like that. That's like a little indicator that helps us. And so let's go ahead and advance. Let's go ahead and advance this. Well, you were right on the bounce. We come right back to the midband. But now did it plow through the midband and start heading up, reconfirming the uptrend? What's going on here? What is it starting to do right there? Now you're at 632, 633. It's getting a possible directional change and rolling over. It's showing more weakness, right? Let's look again. Let's see what happens. Here we come. We break down. Now we take out. Now we get a fresh low. Come all the way back to where the open of the market was from yesterday afternoon, and we bounce, and we come back just a few ticks shy of the midband. So what direction? Background is now red. Midband and all the bands are stair-stepping down. What types of trades are we taking now on YM in here and going forward? Okay, the background's red. Bars are prominently red. Midband and all the bands stair-stepping down. We've broken all these swings. We've kissed and rolled off of the midband twice. You're looking for shorts. Good. Perfect. Excellent. Does everybody see how that works? Now I'm going to go over and let's do the correlation with ES and see how this could have helped us. Let me get the ES chart set up and blow up the first 5 minutes of the market and then put them right next to each other. Give me 1 minute to prepare this, please. Now, just a word of caution, and this is my personal preference. You don't have to do this. Most of you know, I use all the Viper indicators like everybody does. But on ES, I'll use a 2 range. A 2 range, obviously, you can see is going to be twice the amount of bars that you get on a 4 range chart. I like that because I get a lot more detail. I like the detail. I like the detail a lot. It provides what I call more granularity. More granularity. I can see what's going on a lot more. Okay, and I think if you like to trade ES and you want to watch ES and trade ES, you can. I mean, they're faster bars. Okay, they're faster bars. All right, are you ready? You can use Rinkos. Davin, we have an object trader Rinko bar. You can do like a 241. You can do a 341, a 221. Experiment with the settings. A lot of people like our object trader Rinko bars. That you can use those definitely. All right, now let's pair up the YM with the ES. Now you can see here that let's see. Let me go back here. 11, 12, 13, 42. I'm going to have to blow up that a little bit more, okay, to get the same amount of data on there. Now I'm going to try to do this. I've had trouble with this in the past, where you create what's called a global cursor. So what I'll be able to do is take you to points on the ES chart that will correspond with points on the YM chart. Okay. So let me show you how to do that. You go in here to cursor, global crosshair. Come over here to cursor, global crosshair. Now everywhere that I go on here, if this is going to work correctly, I can point to something, and it will point you at the same corresponding point in between ES and YM. Now you can see that both of them had almost an identical pattern at the open in the fact that ES and YM both topped out, putting fresh highs in at the open here. So from that point, in that sense, they are almost identical in the fact that they are peaking at the exact same time, correct? Everybody see that? Here's the peak on ES, and here's the peak on YM to the left. See it? That little crosshair is circling it. See it? Now let's move forward in time. Let's come over here and look at what's going on with YM when you are right here. Where is ES? Where is YM when ES is right here? ES is here. Where is YM? Well, let's come over here and look. I think that was 638. Let's look at 638 over here. 638, you're all the way down here. Where has YM gone to in the first 8 minutes of the trading session? What is that line right there? The white line. What is the white line? Anybody know what that is? What is that line? What is that indicator? That's the low of the day. It went right to it. In fact, I'm going to show you how you can use this indicator to make money almost every single morning with like 1 or 2 trades. That's all you need to take, 1 or 2 trades. And when you short these markets, they go right to the bottom. Almost every day without exception, like clockwork. You could put your targets right here and they would be filled. But the takeaway is this. When YM is here pushing the lows of the market at 638, ES is where? Where is ES at that time? Why, it's right here. It's sitting right here. I hate this global cursor. I'm going to take it off in just 1 minute. I just wanted to show this. So if you were trading ES and you look to your left and you saw that YM is breaking the lows of the day, what direction do you think that ES, I'm going to take this cursor off because it's driving me nuts. I made my point. Where is this stupid thing? This thing drives me nuts sometimes. That's why I never use it. Please tell me I'm not lost in space here somewhere. Oh, here we go. Okay, got it back. Now, out of this little box right here, what direction do you think ES is going to go based on what YM is doing? Is it going to go like this? Or is the stronger likelihood that it's going to go like that? What do you think? Yeah, down. It is going to go down. Now look what happens to YM. Let's finish out this picture so you can see how powerful this is. We get 1, 2, 3 more shorts, and it continues to drop precipitously, giving you short after short after short after short here and here and here, all the way down, all the way down, all the way down. And this white line, as it continues downward, is fresh lows of the day. This is you can make the case that YM started to break somewhere around 632. Now let's correlate these charts. Here's 632 when it rolled and started breaking, and it would continue to put fresh lows in all the way until I think 730. Let me check that. I think it was 730 is when it bounced. Let's continue on. Yeah, 713. There was the bottom right there, right? 735 right here. So let's go ahead and demarcate that on the line so you can see the downtrend in its entirety, like that. That was ultimately the final low where it bounced. Which, by the way, if you're doing your math, from here to here is over 200 ticks. Yes, that's what I'm trying to, you're picking up on that, Davin, most of you. By the way, if you're coming in late, don't worry about this recorded. It will be posted tomorrow. And if you have to leave early, don't worry about it. It will be on the web, okay? All right. So, now, let's look at some other demarcation points. And let's go ahead and play out ES. Based on the fact that YM was continuing to put in fresh lows all the way down like this, and ES we took short, there was a number of places to get short. You could have boxed it here. You could have boxed it here. Box using an object trader region box, and you could have boxed it here. There were several places to get short when it broke. But nevertheless, when here, let me just help you out a second. When you take a short on a rollover and a break here, where do you want this market to go? If you're shorting ES, YM is dropping 200 plus ticks, like it's been thrown off a cliff, and you're shorting this midband here. Where is your target going to be? I just told you. I just told you over here on YM. I told you where it is. See if anybody's paying attention. This is a pop quiz for what I just told you 2 seconds ago. Okay, you're shorting this box right here because you expect it to follow YM down. Now I've got an arrow here. I'm starting to draw the arrow. Where is the end of the arrow going to go for you to put your target? The low of the day, the white line. Good. So you will place your target right here. See it? Like a tick or two. Now there's another way to do this. Let's suppose that you say, well, Charles, that's all fine and good. I see I can pretty much guarantee myself that I'm going to make 5 points on ES, which is $250 a contract or $500 per two. But what if it does what YM does, and I've choked off a runner that continues to drop because I put it at the target, and it starts doing a YM, and next thing you know, it rips and drops another 10 ticks, 10 points or whatever. How can I assure that I maximize my gain on this short, given the fact that I know it's coming? How might you do that? Any ideas? So what we're saying is we have some high percentage of belief that ES is going to go to that low. And so we put a target down there. But we're saying to ourselves, well, hold on a second. How do I know it's not going to keep dropping and I've choked off a big down sell-off that could have made me a lot more money? What could you do? What might you do to maximize your gain on the impending short that's coming on ES? Any ideas? What can you do? Any ideas? Trail a stop. Put at least a 2-lot on and trail the stop. Good. Perfect. Multiple contracts and trailing stops. Well, let's just keep it simple. Let's just, for the sake of this example, let's just say 1. You put 1 more. You just put 2 total on. Okay? You put 2 total. So the first target for the first contract is going to be at the low of the day, which is right here. See it? We know that. Now we have contract number 2 that we're trailing the stop on. Now let's see how that played out. We normally call trails. Yes, we do, Gene. As best we can, we try to call where we're trailing our, if we have multiples, where we're trailing our stops. I know Gary and I both do that. Okay, here it's breaking. Comes up, kiss and roll off the midband. We took the short in the room. I was in it. I put 4 contracts on. I peeled 2 of them right here, and I trailed the other 2. See this stealth line? And see line 6? See how they're kind of following the price, following the price, following the price? Yeah. See them right here? See them? That's your trail. So here, let me put it right on the chart. So your initial stop from the short is 12 ticks above your entry. So let's say initially it's sitting up here. It's one cancels the other. So you're taking off target number 1 here on the low of the day, right? And then this one goes to when you hit your target, you go to, let's say you're filled somewhere in here. And then now you're engaging the trail. See it starting to follow it down? See it following it down? Okay, let's play it out. Let's play it out. Dropping. Now here is 7 o'clock on YM. 7:03, is right here. YM is still dropping precipitously and trying to find a bottom. Here's 703 on YM. Here's 703 on ES. Now, are you starting to see a correlation? Does everybody see the correlation between these markets? And how YM led the move on ES by a full 5 minutes, or maybe longer, maybe 15 minutes. Can you see that? Charts are frozen. Here we go. Okay, I'm back. Cursor moving, cursor moving. Can you see it now? So let me go back. Okay, so your initial stop was here on your short. Let's do an example. I got filled short on the close of one of these bars right here. I did feel some heat. And then pulled against me, never got the stop, rolled over. I had some very high confidence level we're going to get the lower of the day based on the fact that YM was absolutely tanking. Right? I just drew a circle at 703 on YM here, which was the fresh bottom for the time, and then it did a big retrace. 703 on ES is right here. So you're trailing your stop following this stealth line in line 6. See how I'm doing it? So I'm actually following this. The trail stop follows this line, these lines right here. See them? So let's see where ultimately you were stopped out on contract number 2. It probably got you, and I think it got me, right in here when it bipped up and closed through it. So that was, now if you did 2, you would be taking 1 off here, and then your second contract would come off there. Now obviously YM dropped a lot faster, a lot deeper, quicker, earlier, and it gave us a heads up that an impending short was about to break on ES. That's why I took that short with confidence. A lot of people were questioning me at the time it happened, like, isn't this a phantom bounce? And shouldn't we be buying here? And well, I'm looking at all the correlations, and it was clearly telling me that that market was going to break hard, and it was going to go to the low of the day, and it absolutely broke it. Can everybody see that, how that worked, and why we took that trade? So how much money did we make? Well, let's say you made 5 points on this move, contract number 1. And let's say you got in at 09 or somewhere around here. I just want to use round numbers. I don't have to break out my calculator. And you got down to, I don't know, 02. So that's 7 points, a total of 12 points. How much is ES worth per point? You made 12 points on 2 contracts. 12 points times what? Well, let me help you. You've got 4 ticks per point. Each point is 4 ticks because there's quarters, right? 2, 25, 50, 75, and 11, okay? And each tick is worth $12.50. So 4 times $12.50 is $50 per point. 12 times that would, of course, be roughly $600 less commission. If you did the 4 lot like I did, I made around $1,200 bucks. Something like that, less commission. Okay? Every morning it does this. Now, I've seen other mornings where it'll do the opposite of this. In fact, if you looked at yesterday, I might be able to do this if I have enough time, it did exactly the opposite. When it peaked, it pulled back, it held the mid-band, bounced like a dog, and then went up to fresh highs. Let me see if I can scroll back to yesterday and show that real quick. And then I want to show the correlation with gold and ES. So what we're saying here, and the takeaway from what I'm showing you, is that we should get away from trying to trade markets in a how would you say, in a vacuum. In other words, we don't just look at one market and see what it's doing and try to make a decision on one chart and not look at what's going on around it. Right? We've got to look what's going on around it. In fact, what I'm going to do before I do that, let me do this. Let's look at gold first, and then we'll come back and look at the YM correlation one more time. Stand by. I'm going to load a gold chart up. So while I'm looking at, most of you know, of course, I have the four large flat screens here. In front of me, I have the ES chart. That's my primary go-to trade. I trade it just exactly like I explained it this morning. That's how I trade every morning, okay? And I have to my left screen is gold. To my upper left in the corner, upper left is crude. And directly above ES on that fourth screen is the YM chart. That's how I have that organized. Now, if you don't have all those screens, maybe you have one or two screens, what you can do is have like a YM chart next to an ES if you're going to trade ES. Or you could put a gold chart next to ES, and that works pretty well too. Now, based on what you know now, how does gold normally move in relation to ES? Does gold move in the same? Now, this is another correlation. I want to put a caveat on these correlations. Not every day is perfect. There are days where this does not work. Okay, I'm about to reveal this to you. Now, if you're going, but before I show it, let me just ask the question this way. If ES in the equities, generally speaking, in most mornings, there's been one day this week where that didn't work. If the equities are going down and tanking, what direction should gold be going? Up or down? Equities are down. What direction should gold go if all is right with the world? Is it a mirror image of the equities, or is it do the same thing that the equities do? Does anybody know? Yeah, if the equities are going down, gold should be going up. So let me show that. Okay, here's this morning at the open. See it? What direction is gold going at the open? Straight up. Yeah, you bet. You think? Gary caught this one. I think I missed this one, unfortunately. I got the shorts on the equity, so I made good money there. But I think I missed that gold. The gold just took off like a bullet. I mean, I don't forget where he called it. I think he called it way down here. I can't remember exactly where he called it or got in, or when it broke here. Somewhere in here he got long. I know that. He called it and he took it. I think he put a 2-lot on too. That's just monster money. You know, let's say he got filled at, I don't know, 96.50 in here somewhere and went all the way to 04. What is that, 60, 80 ticks? And you got to realize that gold's $10 a tick. That printed money, that trade there. Anybody get it? Richard B, 95.50. I caught that long. Good for you. Wow. That was almost 90 ticks for you. Yeah, he was calling it down here, I think, wasn't he? Somewhere in here, I think, as I recall. I don't remember. I don't honestly remember. It might have been here. Might have been down here. Might have been here. Might have been a box here, I think. Richard B got it 95.50. So let's think about this. What was going on at the time? At the time that gold is smoking up, just fresh high after fresh high, all the way to 645, fresh high peaking. That's what this blue thing is. Fresh highs all the way up, all the way up, all the way up. And we're sitting here and we're staring at ES. And what do we just look at on the YM chart? What direction was YM going while gold was doing this? Remember? You looked at it 2 minutes ago. It was tanking, 200 ticks, right? So based on YM, if you're looking at this market at the open and you're looking at YM rip down and you're looking at gold shoot up, how much confidence level are you now going to have taking this ES short in here? Anywhere in here, just anywhere in there, short. Now, I'm not saying it's 100%, but it's probably up in the 80 to 90% certainty area that that's going to break. Can everybody see the correlations that I'm talking about here? Now, you know, one thing I got to tell you something. And you know, technology has come to a point where, you know, things have been a lot more affordable. You can go on eBay, you can go on Amazon, you can go to Best Buy, and go wherever you want. Get yourself, invest in some good, big, flat screens. You can get a nice flat screen now for like under $200. Get yourself a nice graphics card, a couple of nice graphics card with a couple of ports in the back. You should at least have two, like 24-inch flat screens. I have four on pedestals. I have these big pedestals that they're on. So what happens is when you have I wish I could do a picture of this and share it with you. What I'm trying to tell you though is that when you have that, you get so much more detail of what you're looking at. The market movement is just so much more clear because it's huge right in front of you. If you're trading off of a small screen or a laptop, it's going to be really hard to make money because you're not going to be able to see the details of the movement as well. Okay? All right, good. All right, any other things that we want to look at? Do you want to look at some crude trades now that we did our correlation thing? Anybody, the crude traders in here? I think we clearly showed the correlations between ES and YM and gold. And if you can have those three available, I'll help you try to see those in the morning. Any crude traders in here? You want to look at some crude trades from today? I don't really use that part of Object Trader. Show some crude? Okay, yeah, let me show some crude. Give me a second. Let me put a crude chart up before we run out of time here. Stand by. Let's take this gold chart and turn it into a crude chart. Give me a minute here, real quick. We'll see some questions coming in here. Gene says I made 1,200 on crude today. Good for you. That's monster. I love hearing that. That's just so happy and encouraging to hear that. Gene, I don't use the auto wedge on Object Trader. I'm mainly a box guy. I like boxes around the mid-band. Most of you know that, of course. I'm a close outside the box trade person taker. I know there's a ton of more functionality in that tool, and I know Gary uses a lot of it, and he's taught how to use it and what have you. It's just not something that I particularly work with, that aspect of it. Now, my data's a little screwed up here, so I apologize. For some reason, my data is not loading before about 6:05 from today. So, if we have to, we can go back and look at yesterday. Stand by, the data's coming in. Yeah, for some reason, this thing is just going, why in the heck is it doing this? Stand by 1 second, please. There's something constricting this time. What could it be? What the heck is causing this problem? Okay. Yeah, there's something wrong with my data. We can look at yesterday and we can look at today. Let's look at yesterday and today on crude. Okay. All right. Okay. Here's 6:30 yesterday. So what's kind of, for some reason, messing with my data, and I have no idea why it's doing this. I'm going to have to do a total clear of the database tonight. 23, today's 24th. Yeah, so this was yesterday morning. So I'm missing a huge gap of data between the close and about 6:30 on crude. This data is missing, but I can see that yesterday at 6:30 it came up, broke the mid-band, pulled back and checked it with a little ABC pattern, and then she just went to the races, didn't she? She just took off like a bullet. Holy smokes. Crude has been on a tear, hasn't it? Just every day, straight up, straight up, straight up. These huge 100-tick plus moves. Let me try one thing. I'm gonna pause for a second. I'm gonna do a reload on the data, and let's see if we can fix this problem. Get the full data in here. Yeah, there we go. I think I might have done it. Let's look at today. Let me go back. No. Yeah, this is all skewed. Sorry about that, everybody. My apologies. I got to fix my database tonight. This happens once in a while. Yeah, see, here's 6 o'clock. It opened at the high and kept going. It was hard to wait for a pullback. Yeah, see, I'm missing all this data right here before 6 o'clock. I can see that from here, it just took off like a moonshot. I don't know where Gary got in. This is not accurate. We're missing all this data in here. So my apologies, everybody. So it broke the low, came up, pushed, went through the midband. I'm sure if I had the correct data, that probably paused right here. Gave you a chance to catch it on the way up, and then it just did a moonshot. Just took off like a bullet. No, I wouldn't use a 2 Renko, Chris, on a crude. There's just too much movement. The only reason I do that on ES is because sometimes it gets in those tight little ranges, and I need more bars to see the detail. Because a 4 bar would just take up, you could stare at a 4 bar for like 5 minutes on ES. But on a 2, this thing would be, 9 million bars printing. You don't want that. A 4 range is good. Yeah, 4 range is good. So here you got a moonshot right here. Let's go back and look at yesterday. There you go, like that. So, like I said, I'm not sure exactly where he got in, but this ran from here to here, 55.70 to 57. This is 70 ticks. That's like 60, 70 tick move. So let's go back and look at yesterday, 1023. See how it just went up all day long? Look at that. 54.80 all the way up to 56. It's 120 ticks. There's 730. Yeah, same thing yesterday, huh? Here's 630. Paused momentarily. I'm missing this big chunk of data. But you can see it was clearly an up day. And I think Richard was saying it was hard. If you didn't catch this initial pop here, you had to wait for a pullback, which you really didn't get. Oh, wait a minute. Yesterday was inventory, crude inventory, right? Oh, I remember now. Yeah. We were long from, if we had more data, we were long from down here somewhere, as I recall. And then here's 730, and we said close it out. And I just hit close. I was long, I think, 2 lot. Right before the inventory came, I think I closed it, I want to say like literally a minute or 2 before the shotgun. I think I got out like somewhere in here. I just hit the close button. And then boom, look, it just takes off like a moonshot. But here's the thing. Most of of course, you don't want to hold crude. In fact, if you're in a combine, trading evaluation combine, what have you, they won't let you do it. You'll blow up your account. But in this case here, if you took the chance and you remain long from down here, look at this moonshot. I mean, it just took off like a bullet. All right. What else do we want to look at? Any NASDAQ traders in here? Anybody trade NQ? You want to look at a SPASI chart? Show of hands, NQ traders. Reveal yourselves to the team. NQ. I know some of you track NQ. I could try to get it up here real quick before we run out of time. We used to call it SPASI because we had it in the live room, and it would just be like you have to babysit the whole thing the whole morning. You couldn't even look at anything else. So we took it out like probably a year ago, maybe longer. I still look at it. Turkish lira. I don't even know what that symbol is. Is there futures for it? Probably futures for everything out there. A lot of people ask too. If you look at the volume on CME Group, one of the top high flyers on there is in terms of volume is the bonds and the notes, ZB and ZN. But I have to tell you, they are. If you think ES is slow, oh my lordy, put a ZB or ZN chart up. It just stays in a tight range for like hours at a time, and then if you miss it, it just gets like a boop. It's like some little buy or sell program come in and go boop, and you got to be right there to take it, or you miss it, and that's like the whole day, right? It's just that's why I don't even trade those anymore. All right, okay, here's SPASI. Let me go back to the open. Hold on, please. Man, there was a massive sell-off right at the close. You want to see it? Look at how NASDAQ just tanked. Look at this. This is some kind of news coming in. This is all 1301. So the market closed right here, 1300. This is going into the close. Look how they just ripped NASDAQ down. Amen. Christmas. Let's go find the open. Yeah, big swinging day on NASDAQ. Look at this. Look at this big run up. Woo-hoo! All the way down, all the way back up. V bottom, V top. Here's 8 o'clock. Look at this huge run. I mean, these are just unbelievable. It's going from 79.30 to 70. I mean, it's like 160 ticks. Took out the highs of the morning too. See that right there? What? Okay, before I even show, wait. Let me go back. Pop quiz. Make sure everybody's paying attention. You've had your espresso and you're still awake. Before I reveal what NASDAQ did at the open, what do we think that it did based on what YM did, ES did, and gold did? So if I go back before 7:30 and I start scrolling back this way, I'm gonna scroll the chart this way before 7:30. If you're anticipating what that chart's going to look like, would you say it should be up or down? Now, don't pay attention to this. This is after 7:30, so I'm not talking about that. That's obviously up. Yeah, so we're not talking about that. We're talking about going back this way. Based on what YM, ES, and gold did, what was our anticipation of NASDAQ should have done? That's correct. Down. It should be down. So let's go back and look. See what she did. Okay, you ready? Okay, here it is. Now, this is part of the reason that I've started to back away a little bit from NASDAQ is that here, let me give you some perspective on this. Where would you say that NQ finally started to break? I think it'd be fair to say to put that vertical line somewhere like right in here. And let's get a time reading on that. Looks to me like it didn't really break out of this range, so you can make the case that old spazzy NASDAQ here was stuck in this big old range right here. Oops, power meter. Get out of here. Clinging to my box, you crazy thing. Well, it looks to me all the way till 6:52, almost 7 o'clock. So while YM was dropping 200 plus ticks, ES was weak and breaking, NASDAQ was dinking around up here in a range. Gold was flying. Now, when it finally broke here, did it ever get to the low of the day? NASDAQ. Did NASDAQ on its sell-off, which we can see very clearly occurred when it broke out of this box to the downside, here, okay, here's the break. We all see it. There's the break. Did it ever get to the low of the day like the other markets did on the equities? No, it did not. That is correct. Because even though it broke the open, here's the open line right here, the little dashed line here for the open from yesterday, it kept trying to push the highs of the morning. Push. 1, 2, 3, 4, 5, trying to get up there. It's clinging to positive territory still in here, right? And she broke, retraced, breaks just where it opened by maybe, I don't know, 20 ticks. But this swing low of the day right here around 7 o'clock never hit or broke the open. I mean the low of the day, did it? Let's go ahead and advance this chart a little bit more, and I'll show you what happened after that. Then it started to precipitously, at 7:30, put in a series of higher lows and higher highs, and then eventually broke and ran 160 ticks back up. In stark contrast to what the other markets were doing. So now, based on what you're seeing here for today, would you say that NASDAQ was tightly correlated to the other markets or not correlated? Let's just do it like this. Would you say it's correlated C or NC? NASDAQ was not correlated to the other markets. NC. Cast your vote. I'll give you 5 seconds. Not correlated. Right. That's the weird thing about these equity markets. There are days when Nasdaq is tightly correlated. Excuse me, watching it move. Sometimes it'll lead the pack, but you have to be careful about these correlations because sometimes they work and sometimes they don't, and don't allow them to cause you to not take a proper trade if they're not working. As I recall, I think it was Tuesday or Wednesday morning where gold was going up and the equities were going up. I think that was Tuesday. So on that particular day, they were not correlated. So you have to take the correlation piece off the table and just simply trade price action and trade what you see. That's a lot of people say I don't trade NASDAQ for that very reason. Yeah, two reasons. The lack of, some days, not good correlation. So what I'm saying is this, is that if you were using, let's use NASDAQ as an example, of what you thought would be correlated to ES and YM, and you were trying to make decisions off of this type of price action here might have caused you to pause to take the shorts on ES and YM and miss some good trades. As I recall looking at the Bloomberg ticker at the time, I remember right at the open, the Dow opened at almost, I think, right at its high. It was up like 72 or 76 or something like that. So I'm just trying to remember roughly where it was at, just like the futures markets were. Of course, the equity markets on the cash side are very tightly correlated to the futures side. Everybody knows that. But as the Dow started to tank, well, here's an example. The Dow ended down 30 points, NASDAQ ended up 66, and the S&P closed up just slightly at 6 points. It's the basket of high-tech stocks, yeah, David H. NASDAQ would be like, well, I think Apple's in the Dow now, but, NVIDIA, all the big high-tech companies, Microsoft, Cisco, Xilinx, all those hardware companies, software companies, tech companies. All right, any further questions? I'm going to go ahead and wrap. I hope that helped to see how how these markets can work together when everything is, as we say, right with the world. There are days, I'm not saying that it's wrong with the world, but there's days when those correlations don't work. And so you have to take that with a grain of salt. So what I'll try to do is, when I'm in the live room, is I will tell you, I'll observe with you what's happening, and I'll say, okay, today they're correlated, and to the next day they won't, if they're not correlated, we'll point that out. Any final questions before we wrap up? All right, Gene, thanks for coming. Everybody, appreciate you sticking it out. I'm going to render this up. We'll get it posted tomorrow morning after the live room. We'll get you, everybody, links so you can review it again. I know a lot of people came in a little bit late. That's cool. No problem. We'll get you all set. And